In this video, you're going to see how to roll an iron condor inside Interactive Brokers TWS. This one right here for the SPY is made up of 4 different legs, and you can see that the stock price of the SPY at 425 is below our leg there at the 440 put, which is a problem, which is why we're negative on this trade. So we want to go and give this more time to work out in our favor and hopefully make some money back and not eat this total $176 loss on the position. We currently have 18 days till expiration, so we're going to go out into the November kind of trading range and see what we can do to repair this trade. To do this, we need to close all these legs of the current iron condor that we have. That's what you do when you roll this trade. You close all these out. So I would be taking these as a whole and taking $175 capital loss, but I'm going to be opening new positions to hopefully offset that loss and a little bit more to get a little bit more credit back in terms of what my trade looks like. So to do this, we would right click on roll, and then we would look to go out in time and click on the more button. We're going to go down to November 17th, the third Friday in November. And here's what we're looking at here. All these trades down here at the bottom are going to automatically populate into your trading contract when you're rolling. It's going to be closing off everything you see here. If I open this up, all these trades are going to be closed off. If I have a 440 put that I bought, -1, this one's going to be a buy, which is the 440 put right there. And conversely, the 435, you're going to sell the 470, buy the 465. Now, we want to do the exact same thing and just set up another iron condor for November 17th with the expiration date, but we cannot use the same strike prices because the stock price has gone down so far. It's currently down at 425. We have to go lower. We have to lower our stock prices on the put side and lower them on the call side in order to make this a credit spread. Otherwise, we'll end up being into debit spread. You don't want that, but I'll show you how to check that in a second. So what I'm going to do is I'm going to go just below the current stock price and say pretty aggressively, this has kind of bottomed out here at 425. I'm going to go down to 423, and we're going to have that roll right there. Roll to 423. We're going to sell this put, and we're going to buy one more put down at the 417 area there to put on the put side of our iron condor. Now I'm going to do the call side, and the call side, right again, around that 425 area, I'm going to go up to 430. And we're looking to, this is going to be the buy. Because I want my call option that I'm selling to be closer to the stock price around 430, I'm going to put this buying of a call option here at 435. And I'm going to collect this right here at 430, at 890, and we're going to roll it like that. Now, when you go down here, this is the most important thing to remember. You have your legs that you're closing at the top. You have your new legs that you're going to be opening in here. And you have to understand this number down here, this limit order here. If it's not showing a negative number, you are not getting paid more money. When I see this negative number of -40 right now, what it means is that I'm closing off this original iron condor and I'm going to take a loss of 175, okay? But when I do this and I put all these trades back in, my overall net profit of doing this potentially is going to end up being $40 or like -0.04 cents, which is drastically less than the $2.19 that I sold this trade for originally. So my potential profit is less, and I'm also a little bit closer to the money at 423 here and 430 compared to what my original parameters were at 440 and 465. But we have some more time for this to potentially work, and hopefully it ends up being and ending up in between that 425 and 430 area. If I wanted to do this a little bit differently, I could just change these numbers and tweak them a little bit more if I wanted to. Maybe push these out to 440. Let's see what that looks like. 440 and 435 on the call side. But doing that is going to impact my overall profit. And now down here, if I go to advanced, I'm going to show you that the advanced and the more margin, it's showing a debit in my account. You don't want to have a debit. That means you're going to be losing money in your account. It's going to be a position that you're paying to open up. You don't want to do that. You want to make sure this is a credit spread. So I have to tweak my strike prices again. And we'll go back and put this down to a 430 strike price. I'm going to leave the call at the 440 area, so there's a little bit more buffer on that end. But now I have a little bit more of a potential profit in the credit area coming in. And again, this is the fickle thing. If I go to advanced and margin performance, I have a credit displaying there now, which is what you want to see. You want to have a credit spread. So a C is going to be showing up there. So this would be the right way to execute this. My probability is around 71% for being profitable on this. And we can close this now just for one more thing I want to show you. The problem is that when the stock price moves against you this quickly and this fast, it can be difficult to build out another iron condor, or you have to go super far out in time, 46, 74, maybe even days, to actually do this to get the option premium back in your favor in terms of a credit spread. It makes it very difficult to do so. And what I'm really doing is just kicking the can down the road, saying that I lost this trade. I'm going to lock in this capital loss right now, but hopefully this bounces back for November and I'll still make up some money in the overall trade doing this. But the problem is that when you lock in this trade, if it still kind of declines or goes against you, you can end up losing on this kind of roll position and losing again if this trade down here at the bottom does not work out. So sometimes it's better just to close off the trade and take the capital loss and just open up another trade entirely. Sometimes it makes more sense to roll. It's kind of a personal decision based on what you want to do and how comfortable you are with your risk parameters in the trading platform. But if I wanted to submit this finally and lock it in, I could go submit order. And now I have an option combo. It is live down there. It's in my activity order button right there. And once it goes in, I could even do a market order potentially. That would get it filled. It just got filled right where it's at. So now we can see that I have this in here. I've got all these legs that were closed off. I'm going to have a small capital loss realized in my account up there. And I have a new SPY. It's not going to show up in here as a iron condor for some reason. It looks like a combo, but it is a iron condor in the fact that it's built the same way. And currently the position is just down a few dollars. So we'll see how this works out. But that's how you roll a iron condor into the future when you're looking to roll out and give yourself more time for the trade to work in your favor.